Hey guys, I'm going to go through the markets again. It's Will here, as usual. And I use TC2000 here. I'm going to show you the charting and the technical analysis for the indices, and then we'll get into sectors and stocks, after that, as usual. So we've been in a downtrend for a while, and there's some, I've gone through this quite a while. So I've been talking about the situation, the negative situation, for quite some time. So it's not just changing from one day to the next that some channels do, but one of the ways I show that is through this channel here. You've got this two lines that are like parallel lines basically, and we come up to the top line and come back down. There's other lines as well. So once we broke down below the 50-day moving average and even the 200, then we failed here. That was a bad sign. We tried to get back up to it. We basically failed at the 200-day moving average again. And then we've been below the 200 for quite some time. And we're just right at it right now, but it is downward sloping. But on the daily chart, we have momentum. We can see it's climbing up here. This is price percent oscillator. It's basically MACD, which is the momentum indicator. And it is getting close to zero. So once it usually gets to zero, is where you basically breach the 50-day moving average. But like I said, we're in a downtrend with it's downward sloping moving averages. So you can see that we've got like a high here, then a high. So it's a lower high, lower highs, and lower lows essentially. So right here we've established a higher low, a couple of higher lows here. So it's kind of like a wedge where you have this coming up and this coming down. So, we'll see what happens with that. The other thing I like to do, I look at the weekly chart, and you can see that it looks like we kind of bounced off the 200-week moving average, but, and we're starting to move up a bit. And here with the momentum, we're just crossing. Not quite at that point. And the momentum is starting to curl around a bit, but it hasn't completely done that. So we'll see if that continues with new higher highs and higher lows. But all the indices have a similar look to them. Oops, let me just click on the charts here. Downward channel. We've bounced off it a few times, and now we bounced off the 50-day here and then here as well. I've got the pre-market, you can see on right now at 6:10 in the morning. You can see the actual prices. If I click on the 10-minute chart, I can see a gray area. This is showing the pre-market right now, which is nice. So if you want to get TC2000 software, you can check out the link in my description in the video below. In the description below the video, as well as you can get $25 off if you decide to sign up for a membership. And I've got the gold plan in real-time data, so I see real-time data, US stocks. There's no delay. And so if we look at S&P 500, similar situation. You can draw a channel, like this is kind of the big downward slope trend line, but there's also one like that, which is a bit more narrow. But it's also, you kind of correlates, in this case, to the 50-day. It's kind of bounced off it here and here. There's many lines you can draw, and that can get overwhelming sometimes, but you have support and resistance. So if I draw a line across the bottoms here, it ends up being resistance here as well, right across there. So I'll just show you with a line. If I draw a line underneath those, it's not quite, yeah, it's pretty close, but you see how it bounced. It had support at those prices, and then it bounced off those again 3 times here. So anyway, it's not great. Dow Jones, similar downward channel. The momentum's moved up lately, and we're trying to break through the 50, but it's not a great scenario. So once you see that the indices, and like I said, you can go to the weekly chart as well, just to kind of see, it's sort of temporarily, sitting a little bit at the 200, trying to curl up here, but hasn't quite done that. So like you see with the 2020 crash, you might not get in really early here after this big, huge reversal, bullish engulfing candle. That could have been your sign, and the turn up of the momentum on the weekly. But if you wait till it gets right up to zero, it's still a good situation, but you're waiting for some time. But you can see how like it came up here and the momentum came up really fast. It was still kind of up, and then it crossed down right here. And the stock market still went up for a bit. It had some ups and downs. And then now you see, so that's when you get the divergence between the momentum. So when the stock's going up, the prices are going up, and the momentum's going down, there'll be usually a pullback in the market because there's a divergence between the two things. So one's going up, one's going down. So you can see that this kind of led the market where it started going down, and it still stayed up or horizontal, and then eventually it rolls over. So this is an early sign sometimes that things aren't doing great. The other thing on this chart I use is the relative strength here. So because energy was so high, I compared it to one of the oil in Canada, the oil energy ETFs, but you could make that the NASDAQ. That's usually what I had, or S&P is the usual default. But because the NASDAQ was doing a lot better than S&P over time, I used the NASDAQ. And then over the last while, energy was doing so much better that I started seeing if anything was doing better than energy. And so therefore, you can sort of focus on a few things that are doing the best overall for a period of time, and it's instead of diversifying too much and buying a lot of different things. So once we see that the markets aren't doing great, overall, then that would kind of lean you towards, maybe more short situations or inverse ETFs. Like I've got a tab here. One of the nice things with TC2000 is I have a whole bunch of tabs with different stocks, and that way I can have a lot of information in a short amount of space. So there's inverse of ETFs and also technical, like specific sectors, financials. You've got an ARK inverse ETF. You have in Canada, you have a inverse cannabis. You can see how well the inverse is done. And people say inverse ETFs degrade over time because they're reset every day. But if you hold them, the price is the price. So when you buy it at this price, you sell it at that price. That's what you get. So don't get too, the inverse ETFs can be held for a period of time because obviously if they go up or, after you buy them, you're going to make money. So, but if you want to look at individual sectors, I do it a few different ways. I have a scan that looks for stocks that are above the volatility stop and above the 50-day moving average, essentially. And so there's only a couple right now, but ARK is, I want to check this timing on this one. Yeah, that shouldn't be. If we look at ARK, it's just crossing over the 50-day moving average, and its price percent oscillator, which always kind of coincides, hits the zero line. But it's been in a downtrend here. You can see how like a couple times there's a bit of a reversal here, and one difference down here is that this momentum actually crossed up, and you have these green histograms. So this one didn't quite cross. So that is a little different, but you're way down in a low momentum area. You can see that if I draw a line back from the previous drop in March 2020 COVID, we've kind of reached the bottom at that point. So that can be a support, but it might, it may not last, but I mean, we have this cross. It's just the momentum is really low. So like what I was saying is that when you really take off is when you get up above zero, and that's where the things can take off. And you can see this whole time it's kind of right flat, and then it came down. So it is a crossing point, but it's in a low momentum area. But like I say, it coincides with a really low from March 2020, so it'll come all the way back down again. And I was a little bit surprised to see how home construction, because interest rates and some of the housing stuff hasn't been looking too good. But it did bounce kind of near the 200-week moving average. And we're right just above the 50 again. So it's kind of like people that are buying the dips or after a big crash, it may go down more, but things have come back quite a bit. But if I turn off the scan, the other thing I do, I look at 30-day performance, 5-day performance, 90-day performance to see what's been doing well. Because if you sort by change, it's only the change for like the previous day or the current day. But you want to see something that have sustained trends here. So XBI, like biotech, has been really good lately. There's a bit of a pullback right now, so I'd want to see renewed strength. Oops, I already drew a line on that. So you had a big candle here, a big down candle right there. So that can sort of set the trend for more down movements. Doesn't always happen, but you can see the momentum's crossing over down on the daily like this. So, I mean, it can be short-lived and turn around again, but it is curling down. And ARCG is a similar one. It's a biotech. So what you can do is put a line across like this, and you can right-click on it and say set alert, and then it'll say, when it crosses the trend line, alert me, and you can get text messages and pop-ups on here and emails if you want. So there's a few that are similar. Germ, IBB, those are all biotech that have similar performances, but the XBI was the one that was up the most, and it could go down a lot more too. So Hedge is a bear ETF. If I look at the weekly chart, there's a bit of a pullback lately, but there's the dollar, US dollar, that's been pulled back too. It was quite high up off the momentum. You see how high it gets off of here? It's at 1.0. It's over 1, so it's pretty high. But RK has been broke, as I mentioned earlier, it's broke above the 50. The China stuff is the China stocks. There's a pullback here. You could, like I said, set an alert when it crosses that, and it's in an uptrend lately. If I turn off this stuff here, it's not great, but you can see how it's come up and sort of pulled back, and they're down in the lower momentum ranges, but it's getting close. It might, if it gets close and crosses this 50, then you'll see if it breaks the 50 there. If I sort by 90, which is a bit longer term, you've got this, it's kind of the inverse of the 20-year treasury, because the interest rates were going up, and so this would go up along with interest rates. TLT is the bond fund, but that goes the opposite direction of the interest rates. So if interest rates keep going up, then this would go up as well. And that's the weekly chart. You can see a pullback here. So, oops, I already have lines on that. So it kind of got steep. You can see when you have a trend line that it tends to go away from that trend line, and then it'll sort of end up coming back to it. So if you draw this line across here, like on the pullback, you can see when you break that, you know, it's a good sign, and you're also getting up above the 50, you're crossing momentum. So getting after little pullbacks, even in an uptrend, you can buy after it breaks this little pullback here. You still have an upward momentum, and get after these little pullbacks. And then this one, you'd be waiting. It crossed down now, but you know, you'd be waiting for the next up leg if there is one. What else? That's about it. So if you want to get TC2000, please check out the link in the description of the video. It's a great program. I use it every day. I love this program. I've got alerts. I've got all sorts of scans and different tabs with all different sort of, and there's also tabs down here for a completely different view. I've got Heiken Ashi. If I click, this is all the different sectors I can see in one shot. So like energy, finance, staples, healthcare, all the XLV spider ones. I can quickly look and see, you know, which is in an uptrend and a downtrend. So they're all pretty bad in terms of trends. You know, healthcare was pulling up a little bit, but it's just a quick view right away on it. I can see they're flattening and maybe going to turn around, but you can just see that. And then I've got another one I call naked. It's just the data without any moving averages or anything. So I can see price action very simply. And draw, you know, I can draw a trend line, but I don't have to, I'm not using moving averages or anything like that. And you can see the daily action. It can sort of help you see things sometimes. And I've got financial analysis. There's, I put a bunch of tabs with, if you want to look at earnings and growth of earnings per share and all that sort of thing. I've got one that has fundamentals, which is for one stock, but it's got, like if I put Tesla in or whatever, over here, I'll see all sorts of financial information, which you might be interested in. There's also sector by year. So this has the sectors and then drilling down from there. So you can say like year to date, what's been positive? Okay, energy is the only thing. So, and that might happen earlier in the year, but you know, it's July now, but let's say I'm looking at this, I'm like, okay, energy is what I want to get into. Then I drill down, I see oil and gas midstream. So if this one's, what is it, this one? That one's got, oh, okay. I'm going to have to change this. But like from here, once you see energy, then you drill down into the oil and gas midstream, and I can sort year to date down here and see companies that are doing the best if I wanted to sort like that, year to date change, and click on some of these and see the stocks, you know, the performance. So it's a way to see, it's a great way to kind of focus in on the best performing. So there's lots of different tabs that you have. So I hope that helps, and we'll talk to you in the next video.